Franz-Warkentin of the Western Producer Markets Desk, and I'm here today with Jerry Klassen of Resilient Capital to talk about the recent strength in wheat markets. Welcome here, Jerry.
Thanks, Phil.
So the Kansas and Chicago wheat futures, they've rallied about 60 cents over the past couple of weeks since their lows at the end of June. Minneapolis spring wheat's up about 50 cents since June 30th. Can you give us a brief overview of some of the things, the main factors driving those U.S. wheat markets over the past couple of weeks?
Sure. There are a couple main factors driving the North American winter wheat markets. In the USDA's June acreage survey, which was released exactly on June 30th, hard red winter wheat acres came in lower than anticipated. Now, secondly, last Friday's USDA's WASDE report showed that hard red winter wheat yields were also lower than earlier forecasts. So, according to the USDA, U.S. hard red winter wheat production is estimated at 12.8 million tons, down from 21.8 million tons last year. It's a year-over-year decrease of about 9 million tons. Now, U.S. soft red winter wheat production was estimated at 7.8 million tons. This was down about 2 million tons from the 2025 crop. Total U.S. winter wheat production will be down about 11 million tons from last year, which is pretty severe. The U.S. winter wheat harvest is moving into the final stages. There are quality issues as well, and traders are still getting a better handle on actual milling supplies. To sum up the U.S. wheat environment, winter wheat production is down sharply from year-ago levels. Secondly, there is quality uncertainty. So the market is incorporating a risk premium due to these two factors.
And seeing some of the news from abroad, it seems Europe's also dealing with similar issues. How's the wheat crop looking like in Europe?
In Europe, it appears that traders have been cutting their winter wheat production estimates on a daily basis due to the drought-like conditions, especially in France. Now, the crop agency from the European Commission estimated the soft wheat crop or the winter wheat crop at 126 million tons. This was down about 9 million tons from last year. I think the trade is looking for a number closer to 120 million tons. So the European winter wheat crop will be down about 15 million tons from last year.
Okay. So I think Russia is having a better production from what I've seen, but they're having infrastructure issues with the ongoing war, damaging infrastructure there. Can you talk a bit about what's happening over in Russia?
Our contacts in Russia tell us that there's been port damage in the Black Sea and the Sea of Azov. There are restrictions on wheat exports. That's the bottom line. Russia is now having an energy crisis as well. There are logistics issues. The wheat crop has been developing under favorable conditions. There are some drier pockets in certain regions, but nothing too severe. So overall, it's more of a logistics and export capability that's, should I say, influencing the market structure from the Black Sea region.
Okay. And closer to home, can you talk a bit about what's going on here with spring wheat in Canada?
Well, it's hard to describe overall conditions for the Western Canadian spring wheat crop because it's so diverse. Some farmers report that they will have above average yields. However, many producers report fields that are yellowing or there are larger pockets that have been drowned out. I think overall the Canadian spring wheat crop will be similar to last year, around 29 million tons. The higher yields from the better regions will offset the drowned out area and the yellowing fields. Our contacts in North Dakota and Minnesota also suggest the U.S. spring wheat crop is developing, under favorable conditions with the recent rains. They haven't had quite as much rain as Western Canada, so the crop is faring very well.
Okay. So I guess to summarize overall, we have smaller wheat production in the U.S. and Europe and infrastructure issues in Russia, but overall good conditions for spring wheat in Canada and the U.S. So with all that at play, how should farmers be planning their marketing strategy going forward?
Well, is one crop that farmers have to store. That's very important. So I'm going to say it again. And for farmers listening to this, write this down. Wheat is one crop that you have to store. I was actually thinking about back in 2008, I was in Egypt at the port of Damietta, and my friend, it was about plus 35, 40 Celsius, Phil, and the humidity was heavy. And
like
we were
we've
looking
had
at
here.
storage. We were looking at putting some wheat in there, and my friend said to me, he says, go put your wheat in that corn. And I put my hand, or he said, go put your hand in that corn. So I put my hand in the corn, and you wouldn't believe it. It was actually cool. And I said to him, this corn is cold. He says, we've been storing wheat here for 4,000 years, Jerry. Okay,
Yeah.
so that's just a little bit of analogy, but you have to be able to store your wheat.
Yeah.
There will be a significant rally in the wheat market from mid-September through mid-October. We could see the winter wheat and the spring wheat markets rally $1 to $1.50 a bushel in the fall. Now, farmers should sell about 50% of their wheat from October 15th through November 15th. We'll discuss the remaining 50% of the winter wheat or your spring wheat sales, depending on how the markets are shaping up in the southern hemisphere over the winter. If there's a problem in Argentina or Australia, this wheat market could get red hot.
Okay, so keep an eye on that. Just shifting gears a bit, what are things looking like for the canola crop here in Canada?
The canola crop is developing under favorable conditions in Alberta and Saskatchewan. In the southern regions around Regina and Lethbridge are too hot. There has been some yield drag on the canola in regions where it's been extremely hot, especially overnight. That crop, when I was in university, they said that temperatures have to drop below 17 degrees Celsius for 5 hours every night, or there will be yield drag. It's that sensitive. So some of these southern regions have had very warm temperatures over the past couple of weeks, and there has been some yield drag. I was talking to a producer in southern Alberta, and pivots are going on the canola trying to cool it off.
Okay.
So there is some yield drag in those areas, but for the most part, the canola crop is developing under favorable conditions.
I guess we grow less here, but there's no pivots in southern Manitoba to ease the heat on the canola crop in this area.
Right.
So I guess another thing, driving over everything these days is the ongoing war in the Mideast. How is that escalation lately? Crude oil's up $10 per barrel. How is that playing out in the canola market?
The vegetable oil market has rallied in line with the crude oil and enhanced crush margins for canola. Secondly, over the past couple of weeks, there was talk in the trade that there was buying from some major importers. So there was commercial demand stepping forward, and farmers are on the sidelines due to production uncertainty. There was some farmers selling earlier in summer, but now with the warmer temperatures and the everything going on, farmers have really held back, and they're not really selling new crop canola at this time. So you have commercial buying and limited farmer selling, which is resulting in higher prices. And don't forget, the drought-like conditions in France and parts of Germany is causing some yield drag on the European rapeseed crop.
Okay. So I think while I have you here, Jerry, I know you're also following the cattle markets pretty closely. While everything else has been going up, cattle is moving decidedly the other direction. Can you give us a bit of an update on the cattle market?
Yeah, the live cattle market has been under pressure in both Canada and the U.S. over the past couple of weeks. Now, when you read market commentaries on the cattle market, everything says tight supplies, tight supplies. Well, that's not true. Live cattle that are ready for slaughter, those supplies are not tight. Cattle on feed 180 days or more in both Canada in both Western Canada and the U.S. are up sharply from year-ago levels. Okay, now we have wholesale beef prices grinding lower, and we have the US and Canadian packers curtailing the slaughter pace. So you have a very burdensome supply of live cattle, and you have weakening demand, should I say, which is resulting in pressure on the cash and futures markets. Now, the feeder market, is come under a little bit of pressure, moving in line as margins, they're still in positive territory. But if we see a little bit more downside in the fed cattle market, margins are going to be in negative territory for both Canada and the U.S. So it's getting to be a very sensitive situation here.
Okay. Well, I think yeah, covers a lot of ground. Jerry, thanks for joining us to talk about what's all at play in the grains and the livestock these days. Appreciate it once again. So I'm Phil Franz-Warkentin of the Western Producer Markets Desk. And yeah, thanks again, Jerry Klassen, for providing some insight today.
Thanks, Phil.